in a pool. Let's What's up, guys? What's going on? Just give me 1 second. Zydax crew says hello. Nice. What's up, guys? Just give me a minute or two to get it started. It's been I don't know, it's been a week, I guess, since I've done a stream. So I know there was a bit of a long intro there, but I just reshared the link on Twitter. How's everybody doing? You guys can hear me clearly? How's the background noise? It's not overdone, right? Loud and clear. Good stuff. So yeah, for those of you that are not familiar, I just shared again. Everyone always asks me the specs for the PC, and I had this built by none other than Zydax, and they're in the chat right now. And I just actually got a new PC a year ago, and it was a top of the line PC. It was built as well, but I run a lot of different platforms. Between having a ton of different windows open, you guys know that I use Quant Tower. Right now I have Trading Light open. I'll leave stuff. I have a ton of things open, right? That would normally eat up a lot of my computer's attention. And I play Warzone. So as you can imagine, I was killing I was killing my last computer. I'm not technically savvy enough to just let this stuff roll off the tongue, whether we're talking about like the CPU or memory. All I know is I need something that works. So now I have everything open, and I'm using less than 4% of my CPU, it says. I have my Stream Deck open, which is ridiculous. So amazing build. If you guys are looking for a new computer, I can't speak highly enough about them. So we'll get it started in a minute. Just wanted to give a little shout out to them. How much did it cost? I don't get into how much it cost. It wasn't cheap, but I don't want to start throwing out numbers. If you hit me up in the direct message, I'll tell you how much it cost. Someone else did that on Twitter too, and I was like, I don't want to just write like how much I paid for it. You get what you pay for, though. But if you send me a direct message on Twitter, I'll gladly let you know what the breakdown was. All right, so how's everybody doing? Again, I haven't streamed in a week, so we know how it goes when I don't stream for a while. I'm a little rusty, but we're gonna try to keep this as casual as possible. Say hi to everybody. I have so I'm using Streamlabs now, which is great because I can stream on YouTube and Twitch at the same time. So that's really convenient. I also have the Stream Deck set up so that I can transition really easily. All right, just going through the Twitch chat, and we'll go through the YouTube chat. Yeah, it was extremely cold in New York as well. It's like 20 degrees this morning. Okay. Yeah, I can't speak highly enough. Ting soon. It's an amazing computer. More than a horse. It depends on what kind of horse you're talking about. Certainly none of them that my wife are currently looking at for another horse. Yeah, maybe I'll break that 100K threshold. No, so. And the beginning of all streams, so for anyone who's new, so let me just introduce myself. Obviously, I'm sure many of you are already familiar with me, but my name's Ryan, also known as Canteringclark on Twitter. Just to get some stuff out of the way in the beginning, formalities. None of this is to be taken as financial advice. This is strictly for entertainment purposes only. If you guys are interested in any of the platforms or, the tools that I use, some of the links are below. So for example, I had a bunch of people asking me how to get FTM or Phantom, and you can get that at Femex. You could get Spot Phantom at Femex, as opposed to using something like MetaMask, or if you're not KYC'd on another exchange. The benefit of Femex is you don't have to KYC. If you want to, you can, and you pay reduced fees, but you don't have to. So I think that's all, right? No financial advice, yada, yada, yada. We'll get into it. The horse that passed the test. Well, it's one of a few that she's looking at. That horse that I posted a video of happens to be really large. And for the hunts, I think that she would perform I think she would prefer a smaller horse. All right, just going through the YouTube chat. So I have both chats separated. I want to make sure I don't miss anyone. So I'm coming off of being sick. I might still sound a little like it. I think this has 128 gigs. Okay. Cool. All right, so how are we feeling about the market right now? How are we feeling about BTC? I've started to divert most of my attention to trading alts. So I have a few things up on this screen right now. I have trading light right here. I have, what do we have? I have AgriTrade up top. So we have the aggregated tape, we have the spot, we have the perps, we have large lots on the far right, and then on the far right, this chart is all of the exchanges. All the exchanges from perps to spot exchanges. And we're basically just seeing where everybody is trading in relation to one another. And then you can see on the right-hand side of your chart, we have the DOM on Quant Tower, and this is directly connected to BTC. So if I would like to place a trade during the stream, I could go ahead and do that right through this DOM. So that's the depth of market. Let's see. So I've been trading alts the last, feels like now for 2 weeks primarily. I think there's a few reasons. I think that, one, Bitcoin's not very exciting. Trading Bitcoin intraday can get really boring, especially when I was talking to Adam this morning. There's no RTH or regular trading hours. It's a 24/7 market, and there's a good chance that if you step away from the computer that you could miss a significant move or a significant opportunity, as opposed to, you hear my wife yelling at the dog, as opposed to trading legacy or traditional markets where there's a bit more of there's a bit more structure. There's an obvious trading session where most of the activity takes place, so a cash session for the most part. So Bitcoin, honestly, it's something that I've put a lot of focus on, right? Trading intraday Bitcoin for the last 4 or 5 years, and trading alts also, though, right? I was trading alts, but my alt approach was it was more of a swing approach, right? If an alt had momentum, if it was currently in the spotlight, if there was a narrative in the short term, if it was setting up in a significant contextual area, mostly focused on risk to reward, mostly focused on very attractive areas to get involved, ideally having a combination of the previous criteria as well. But my original argument for not getting involved in alts was liquidity, accessibility. So I don't think that that's a real issue anymore. I know accessibility is not an issue for me anymore. And honestly, if you're looking at the most significant alts by volume for the day, by open interest, measuring liquidity, for example, although what I just mentioned, volume and open interest, don't necessarily have a bearing on that, but where the idea of skate where the puck is going, right? Where everybody's attention is, there's a high probability that those pairs that are sort of in vogue are going to be liquid enough for 99% of people to trade, right? So no real excuse to not trade things that are sort of the flavor of the week, flavor of the month. And what I realized is, after focusing more on them, is that one, they are, so Bitcoin is, there's definitely a different presence in the market post March 2020. There are a lot more, traditional participants that have gotten involved in this market, whether that's market makers or higher frequency trading firms. It trades a bit differently on the lower time frame. It doesn't nearly trade as difficult as trading something like the ES does or the DAC does, but it's going there, right? It's a more institutionally adopted and traded asset. And because of that, you're trading against a smarter participant, right? More depth. It's not retail driven the way alts are for the most part. Retail driven pairs, alts, they are highly reflexive. And because they're very retail driven, even though there's an institutional presence in them, a lot of them, because of that, they tend to respect technical levels really well. They tend to trade very technically, and that basically means that a lot of the moves that ultimately occur, to a degree, they're self-fulfilling, right? We look at very significant levels on the chart. We look at the key levels on the weekly, the daily, where prices, establishing value, and we see that the market gets involved around these levels pretty significantly, right? You could expect there to be a significant response at a return back to a daily level, when a key support or resistance is broken. This is something that is very good for a technical trader. That also, and I think there's a pretty big disparity between the smart money and the dumb money, which is what you want to see, right? When we're looking at, when I'm trading BTC intraday, and I'm sorry if I'm going on a little bit of a long-winded explanation about this. We'll get into charts in a second. But when I'm trading BTC intraday, or if you're trading the ES, you want to be able to identify who the stronger side in the market is, right? Where the quote-unquote heavier hand is. And one of the ways you could do this with BTC is, for example, you'd use something like cumulative volume delta. You might observe, single rotation delta. You're looking at volume. You're seeing, okay, there's a lot of work done in this particular area, and that work is being done by market orders. Typically the smaller traders, the odd lots, are going to be exercising through market orders. They're going to be chasing price. The smaller traders are going to be using market orders. And if you see, an increased activity come into the market and you have a delta divergence, for example, it's a good indication that, the heavier hand is in the limit order, which usually is the whale. It's usually the larger trader that's more patient, that, is more cost sensitive, is trading with bigger size, et cetera, et cetera, et cetera. So let me just boot this dude. Actually, I don't know how to boot anybody from what's it called? Just let him talk shit. So you're looking to identify who the heavier hand is in the market, right? Who's in control. I think it's become more muddied now in BTC because there's a lot more depth in terms of participants, where there's not such a clean line. Whereas with alts, because there is so much retail chasing that's taking place, I think it is a lot easier to see. The market is very fragmented. That's still a pain in the ass, right? Knowing where to look is still something that you have to stay on top of, because at any point, one exchange can take market share and you go from, for example, in the past, BitMEX was a leader, and then, Bybit, now FTX and Binance. So these are things you have to pay attention to when you're paying attention to order flow, and it does become sort of, a headache, but I think that a lot of the edge that's in this market exists because of those problems. Honestly, I think I said that sort of fucking backwards. I think that there is edge in the market because there is that fragmentation. It's not, centralized and cleared in one area like the CMA, or through one venue like the CMA, where it's like if you're looking at the ES order book, you see everything that, everyone that wants to trade the ES, right? There's nothing that, it's not like you're worrying about them on, 10 different exchanges. So I've been red pilled into trading alts, and I gotta say that trading them on the low time frame, I could trade them on the 1 to 5 minute chart even, and haven't had an issue. So we'll see how long this persists. I think it's obviously a matter of, I don't think it's going to end. I think it's the the rub or the difficulty with doing this, I think, will be paying a lot more attention to, again, what the crowd is doing, right? Where the eyes and ears are, where most of the attention is in the market, because that's where capital is going to flow to. And that doesn't sound difficult, right? But we know that in crypto, it's constantly changing. So what you don't want to do is, let's say, for example, the flavor of this week is, FTM, NEAR, Harmony, FXS, which I don't think is blown up nearly enough yet because it's not even on a majority of the exchanges. But those are the flavors of the week for maybe the last 2 weeks. Okay, we know how Solana, AVAX, Luna, all these were the flavor of a period of months. What you don't want to do is be doing this, right? Paying attention to where capital is rotating to, trading that intraday, trading it on the lower time frames, taking advantage of the what is pretty ripe activity, and then get stuck still trading that pair after the interest has sort of waned, because what you're doing at that point is once retail rotates, you're going to be just trading against market makers. It's just bots trading against bots, algos versus algos, kind of lower time frame price behavior. So yeah, hopefully that all adds up pretty easily mentally for you guys. I think it should, because so many people in this market have been trading alts primarily for a really long time. So it only makes sense that as the market matures, for one, you could see more things than you can about alts now, or with regard to alt order flow data, than you could years ago. All right, so does that all make sense? This is a casual stream, right? Like I said, I haven't streamed in a while, so mind you if it's not very fluid or I probably sound a little bit under the weather still, right? I'm just kind of shot. I spent the afternoon taking down the lights from our house. It was a pain in the butt. So does that all make sense though, guys? Hopefully that was a pretty good, easily digestible explanation. So Ian, I see you're the last person with a question. So now I haven't done that yet. I want to share that a few more times so that I build up a decent pool. And then honestly, I'm probably not going to pick one person. I'll probably end up picking a couple people, and probably more than a couple, right? Because couple just means two. So, all right. So all makes sense. Good stuff. All right, so I do think, so this software is not Bookmap. I was working with Bookmap for a very short amount of time. Speak very highly of them. Great people at the company, great product, great platform. Just isn't for me. I think that, this market is moving so fast and there's so many flavors constantly that, and you guys have been knowing that one of my issues for the last, coming from trading TradFi, coming from trading things like, index futures, and you're trading just one product, there's a bunch of different software platforms that you have access to, and it's, you could trade, through Trading Technologies, you could trade through Jigsaw, CQG, there's a bunch of different lower end pieces of software too that connect to legacy markets, but you don't have an issue. They're all showing basically the same thing. What you're gonna differ through is with methods of execution, what kind of order types are available, connectivity, whether or not it's gonna matter whether you're going through a prime broker, you have direct market access. But in crypto, it's you have so many pairs, you have some platforms, and this is a struggle I've had for a while. Some platforms that have order flow data for some of the things you trade, and then you have, another platform that has such and such information for one pair that you're interested in, but it doesn't have, something else. So for example, ExoCharts has great footprint, great market profile, Delta, all that stuff for BTC, for ETH, maybe a few other pairs now. It has different periodicities, time-based, rotation-based, volume-based, all of these things that are very useful, right? A time-based candle is not preferred. I'd rather have a tick-based candle or a volume-based candle, or if the market is moving a bit slower, a rotation-based candle. Trend reversal, point and figure. So what I was finding is like I'd fall in love with the platform. It would have A, B, and C, but it wouldn't have D and E, right? So that was a big nuisance. I think that I found, for the most part, something that has enough of everything that I'm looking for, and have to make do if you have that one obscure pair. And everyone knows that lately with, sorry, I am touching the pad. It's a new keyboard. I've never had a pad like this. Make sure my mic is not touching anything too. So what was I saying? It's not like you could have everything in this market right now, because if you're trading things that are not on exchanges, you're trading on dexes, that was a big switch for a lot of people, going from trading on exchanges to suddenly you're trading on a dex, and you can't even find the pair you're trying to trade on TradingView, and you got to find the charting platform that's capable of charting things that are on Avalanche. And now there's obviously crypto's new, which is exciting because there's a ton of new platforms that constantly come out. I shared this one today. It's called the Dip Index Dashboard. Basically what you're seeing with this, with Z-scores and a bunch of other tools that they have set up, is you're looking at what is moving multiple standard deviations away from its norm to the upside, to the downside. This can be very good for an intraday trader. But as you can see, it's a pretty simple platform. It's clearly pretty new, doesn't have everything yet. And this is a good example, right? I talked to this guy today. I think it's a guy, right? I talked to this person today. I talked to this human being today. Abe Trade, Adam put me onto this morning. We were chatting, and this is an awesome platform, right? But when I shared it, it kind of went down for a little bit. I think too many people, signed onto the site. And then another thing is, it doesn't have everything, right? It's an awesome platform. It has, things that are very relevant right now, but then a bunch of other stuff that really isn't. So it's just a good example of what I was just describing, right? Really cool platforms coming out, but some of them don't have what you need. Some of them have, some things you need and other things you don't. Some of them have the things you need, but not the pairs you want. So, I think that point's kind of driven home by now, though. But let's take a look at BTC, because I think that. So when I'm looking at alt order flow, just to answer this really quickly, I am looking at Trading Light now. I think Trading Light's a very good platform. I would honestly value someone like Nomad's opinion or Insilico's opinion, because the one thing, and I was talking to trader SM17 about this 2 days ago. I was like, dude, you use this platform. Do you ever have any issues? Excuse me. Data, connectivity, lag, latency, showing old information, yada, yada, yada. Because if you're an order flow trader, you can't afford that, right? But so far, it's a great platform. Haven't had any issues with it. I have a tape. I have, the tape filter by size for specific pairs. I have the order book. I have Delta, all that stuff. So let's look at BTC. Right, I'm going to get lost just talking on and on. Okay. So there are, there's been a lot of disconnect right now. So for the last, and I say right now, but I mean, the last, let me just make sure my screen is lining up properly. What we'll do is we'll actually switch this real quick so it's nice and big. There we go. Okay. So there has been a large amount of dispersion in the market for the last, I want to say a year, right? Maybe just under a year. So by dispersion, I mean you have things that are moving out of sync with BTC, right? They're moving independently, more idiosyncratically. There is a very strong correlation, but as long as Bitcoin is not, nuking down, right? Alts are kind of free to outperform, and we have seen that alts have outperformed in both directions for the last few months, which is small set of sample of data to refer to, but still the most recent data is probably the one you want to continue to stack to make any kind of judgment. So we've seen alt outperformance. As Bitcoin has continued to move down, it seems like the pool of alts that are outperforming has continued to increase, right? There's more of a compelling story now fundamentally behind a lot of these alts, because it's not like we just have 2015, 16, 17 white papers. Now it's okay, we have a white paper obviously, but we have a product, you get to use it. A lot of them are the same thing, right? some kind of yield platform, farming platform, game, DEX. Obviously, the market's going to get more sophisticated. We're going to have structured products, and a bunch of cool stuff's going to come out where you can actually use it and begin to frame an idea of revenue and how much money is actually being locked up in these platforms, what the user base is, et cetera, et cetera. So there's a little bit more of a fundamental base, I think, which ends up buffering some downside because I describe this in traditional markets. As the market moves down, you have different types of participants that are sort of stepping in the way, right? Market, if the S&P drops 50 basis points throughout, in the day, which, not uncommon, high frequency traders get involved, lower time frame traders get involved, scalpers get involved. The S&P drops, 5%, CTAs get involved, trend followers get involved, the S&P drops 10, 15, 20%, value investors get involved, long-term fundamental investors get involved, traders also, I said investors originally. But it's the idea that someone's willing to get in at a certain level because, Apple doesn't just have price going for it. Apple's a company, if Apple drops, Apple's, number one, I think, performing, or one of the number one performing ones this year, $3 trillion market cap. If Apple drops 25%, chances are that's a fantastic buying opportunity. Could be a black swan, right, where it continues lower, but on balance probabilities, when you get a move like that, people are going to be jumping at that opportunity, right? So I think that's becoming more of something we're seeing in crypto. Whether or not it's true doesn't really matter as much as, meaning whether or not there are the reasons to back that up doesn't matter as much as the fact that there are people willing to back it up, right? People willing to get involved. If Solana drops 30%, you're going to get people that are like, Solana is the future of finance, right? They're going to get involved. So that sort of belief system ends up creating floors, right, to some degree. I don't want to say these have floors, but there obviously there's a different bid this go around, this cycle. But there definitely is a correlation in terms of when Bitcoin crashes, all correlations go to 1. But I do think you want to be buying some of the better performing alt dips versus buying BTC. Bitcoin is the gold of crypto now, right? Like the reserve currency, the gold, the treasury of the crypto market. But it is, a high-flying tech stock compared to legacy. But so looking at BTC right now, because I've been just going on for a while. I was sorry about that. Yeah. So I apologize. This mic must be really sensitive. I'm a New Yorker, so I talk with my hands, and I am tapping the desk lightly. But it's a microphone, so it's like the same thing as if you had like a bone mic or a neck mic on your, you could whisper and it would be able to pick up. You could hear things better when it's on your skull because of bone connectivity. The same shit is happening with my desk just because it's connected. All right, so as far as BTC goes, we're looking at a high time frame chart right now of this breakdown. We're still in a range, right? We're looking at a monthly TPO profile right now. So, beginning of the year, we did already just take right now the yearly open. So the yearly open is, something we've taken that. So we have a wick on the yearly. There's a few people talking about that. We have to take the yearly. We have to take the lows. Chances are you'll see that it's very few times when a higher time frame candle is left behind without creating some type of wick. So it's usually not the case that you'll open it in just one-way trip without coming back to clear that area up. Similar way to, similar idea behind unfinished business if we're talking about a TPO chart with poor highs or poor lows. So just looking at this chart right now, clear story, right? Moving sideways. Not, people are up in arms talking about, this is another thing I was getting tired of because I was starting to, I was doing the same thing, right? You're focusing on Bitcoin and you're looking at it from an intraday standpoint and everything's granular, right? Everything is like at the atomized level. And you just get tired of looking at that over and over again when it's really not doing anything and everything else is doing everything. So Bitcoin is moving within a range. Chances are that when you have a structure like this, that when you consolidate it one side of the structure, you eventually break that side. Here's what I think ultimately is going to happen. If we continue to break down from here, I think that it's probably going to be a short-term dip. Chances are that if you print in an area like this, so we have a wick back here, you trade there once, you're probably going to trade there again. It's very rare that we put in a higher time frame bottom where we have a structure like this where we don't explore that wick significantly. With meaning we have a ton of volume transacted in that area, but it might be a conversation about magnitude and intensity versus it actually persisting. So the idea is we'd probably break into this level, and shorts would get very offside. People would sell the breakdown, yada yada yada, and that's ultimately where maybe we could see a reversal take place. But we are consolidating at those lows right now. I think that this market it does pay to pay attention to fractals, and it does pay to pay attention to sort of the progress of activity. And you can see that the market had this series of lower highs on the way down. We have a series of lower highs right now, so at least you have some type of governing structure from a diagonal standpoint to say, hey, this doesn't make sense kind of buying unless there is some kind of change locally. Meaning, you continue to buy these dips if you want, but nothing has really changed more locally, right? So something local would be, us retaking a local high, and then you honestly have a stronger case, right? Because, you have the first week of activity isolated right here of the new year. VWAP is going to be around the point of control. If you're trading above this more local area, I think at that point it just becomes very obvious that if you just looked at this like a sort of micro consolidation, trading above 48, for example, probably means after that period of activity that if you're unwinding anything, it's going to be shorts, and you're going to have a lot of longs coming into the market, and at that point you're probably covering this gap. We haven't done that yet. We haven't even, we haven't been able to break the last high except for to rob it of any kind of liquidity above a wick. So another thing is if we look at this, a bit more zoomed out, and we'll just get these off. Could always put those back on. What do you see? It looks like sort of a scaled down version, fractal of this period back here from May on. And it's tighter, right? There's less, less ground being covered. Structure on the high time frame has not broken down yet. So if we look at this, just for example, from a weekly time frame standpoint, we have a higher high, higher low, higher high. We haven't broken the higher low still. So this is still intact, right? Now it's ugly. But one thing that I have noticed with BTC and with alts is what alts do, Bitcoin eventually does, right? Slightly differently, right? So we've seen a lot of alts kind of have this pattern where they're creating, very tight funnel before breaking upward. So maybe that's what we're doing with BTC, and because it's such a heavier, it's a much heavier asset, it takes a lot more to move, it's just going to be slower, right? I said originally big ships turn slowly. I think that applies in many different ways with regard to how long consolidations take to break out, how long certain situations take to resolve and so forth. So higher time frame structure is not changed with regard to the weekly. Obviously, and the daily is where the weekly begins to change. So we've had, a change of events more locally with breaking down on the daily. And if you look, we're kind of midpoint of this entire structure going back to, the beginning of this year. So I think that this is, this similarity is something that is worth noting. Again, same thing sort of happened, right? We had a 3-drive structure, right? 3-drive structure, broke up, took the highs, broke down again. Same thing over here, 3-drive structure, broke up, broke down, and now doing what looks like, it looks like it's honestly beginning to fall into a really low volatility period, the same way that it did right back here. We could look at, a bunch of stuff. We could look at overall realized volatility. We look at, implied vols dropping. I think it's like 60% right now. It's dropping for ETH, dropping for BTC. The only thing that is different from here to here is funding for this, and this is funding right here is not as, I guess, extreme as it was back here. So you had funding that was, persistently negative. A positioning tool we like to pay attention to. Price was still moving down though, so again, it's a matter of work versus progress. It still was moving down, so sellers were having an effect on the market. So what you want to look for is the time when price is able to recover a level after all that funding has been, you know, after all that funding came into the market, you know, basically looking at a consolidation of price, reclaiming it. So this is different. This is open interest is going up, but funding is flat. We have a little bit of negative funding here and there. It hasn't done anything extreme at all, but it has stayed neutral. It hasn't been, you know, as obvious, I guess I would say. One thing that is different from here to here, and I'll actually pull this up right now. Sorry, my wife is yelling at the dog still. She's a puppy, but she's a really big dog. You guys are gonna probably see my email, but I don't care because they made me this email, so I don't have, like, this email address isn't attached to anything else. So this is something that I look to from time to time, just to gauge sentiment, and it's 25 delta skew. 25 delta or 30-20 delta skew. So we're basically looking at the difference in implied volatility between calls and puts of the same or similar delta. And what we could do is we could look at, we'll go to, where is it? Here it is right here. We could zoom out really quick. We'll go all the way back to May, and I'll show you another thing that's different. And I just think I think chances are now we're going to squeeze a little bit lower. You know, if it was going to happen exactly as I imagined it, not exactly how it would get involved. So if we start moving higher, I'll get behind it. But I think that we end up squeezing lower, taking out some stops, and then having a more significant reversal. Same as back in May. And I think that, you know, the trade to get behind is when we start the same thing I said back here, which was, as long as we continue to move down, I'm going to expect lows to be hit. I'm going to expect, at that point I was expecting 27. Once we retake a local level, after having that sort of build up and open interest, I'm not gonna fight that. So if we break down lower and then we're back above, you know, 45, 46, well, I think it's lights out at that point, and it begins to show that maybe we're recovering, you know, especially if we have a, you know, a significant liquidation event down here, you know, ton of volume, other things you would normally look for to say maybe a trap was built. But another difference between here and here that's not funding, but is again a similar sort of positioning metric, sentiment tool, et cetera, is this 25, or as I said, 30-20, it's 35. They have different options, but I like to look at 25 delta skew or 35. It used to be 30-20, but it's, you know, now it's 35. One difference is if you go back to May, you go back to that period, and this is across all tenors. So when I say tenors, I just mean expirations for options. This is all of them. Now, typically what you're going to see is that BTC longer term I was going to say expiries, but longer term expirations that got all messed up. They're usually going to be the case that calls are trading at a premium. So call implied volatility is going to be higher than put implied volatility. It's just the market is more or less across the board long more than anything else. So the difference is back here, puts were heavily in demand and favored across all of those. So usually for sentiment, I'll pay attention to like local expirations, so near term, 30-day. But this was a case where they all went negative, right? So if I just take them off though and leave on the closer expiration, right? 1 month, very negative back here. Over here, it's a different story. Implied volatility is down a lot, but you know, skew is positive. Truncated, there you go. Skew is positive, right? So back here it was very negative. Over here it's a bit of a different story. It's more neutral, but you can see across all expirations it is positive. So the market isn't very negative. Maybe it doesn't have to happen, right? It's something worth pointing out. So into this wick, I would expect that if we did break down, I think it would bottom would form right around here. You know, just to put it very cleanly as I did, I said this, I shared a chart basically saying that in this region, wherever it happens, and I think it was more like 42. I don't want to like start drawing all the way into the 30s because I don't like that. Even though, hey, you know, things can be wonky from time to time. I think that this region is an area where a bottom forms. It's just very unlikely that the market is this one. This market is not. There's no reason for it to die right now. So, is it cooling off? Is it going through its phase? Yeah, but I would hands down put all my money behind this area being a buying opportunity more than anything else. And that could start right here, but I just think that at this point the market is showing us that it wants to give us that oh shit squeeze lower before ripping back further up. All right, so let's look at just some alts across the board. So skate where the puck is going. FXS. This has sort of a flywheel effect that is really beneficial for price. Phantom. I think a couple people are privy to what's going on this protocol in the near future, but I don't know, so I'm not going to share that. And that's not bullshit. Some people I know are, but someone who told me said not to tell anybody. So it's just something that is significant, taking place on this protocol. You guys can use your imagination. I'm sure half of you already know. The market has been getting long in advance of that. So it's not like it's early at this point, right? I mean, the market is up like 100% in the last couple weeks. Phantom, 1, near. Now, if you're looking at all these side by side, one thing that I want to make sure when I'm getting involved in any alts, and this has been shared pretty thoroughly by other traders as well, is making sure we don't have any kind of disgusting, fully diluted valuation to market cap ratio. I don't want to know that, like if we look at this example right now, near is the ugliest. FDV, total supply versus circulating supply, and how much is on the market, how much is bought. It's about slightly under 2x the current market cap. If you have a really high FDV to market cap ratio and it's really ugly, let's say you have a market cap of 1 billion, your FDV is, your fully diluted valuation is 20 billion. That's ugly, right? That's a lot of emission. That's a lot of overhead supply that's going to hit the market at some point. It's a lot for the market to absorb. Yeah, there's a way that the market can absorb that already through OTC, but it does make it not as attractive. So things like, for example, one Phantom, these are trading very close, right? So 7 billion, roughly 9 billion. Harmony's probably the closest, 3.5 billion to 4 billion. So not really worried about, some kind of sneak of supply hitting the market, right? That's not already in the market. And this can be something that can be overwhelmed by retail, right? We definitely see this get run over regardless, but I think it's a matter of context, right? And who knows, like the market could just, hey, the market's doing weird stuff right now. Like things are performing really well and Bitcoin dominance is very low. Bitcoin looks like it's trading in a different market, right? So the FDV argument, when the ratio is really ugly, is really good to take advantage of when we are in a period where the market's going to sell off and things are going to go through a bear market period, right? Obviously that could be individual pairs where some outperform and some don't, but if I'm looking to short something, I want to short the thing that is really extended and has a lot of unlocks that are going to hit the market, right? A lot of supply of people that, if you get a seed round, I've had a few seeds where I've been involved in things and, I've sold some of them, I've held on to them, but if the market had, let's say for example, I'm in a seed for XYZ pair, I'm already up like 100x. Okay, so I'm Joe Schmo, a trader. I'm up 100x. When there is an actual market on an exchange, if that candle, the first candle nukes 50%, right? Or let's say, for example, the price, just to make this a little bit more tangible or real for you, I'm a seed investor, okay? I am in something, I'm already up 100x. It gets listed on the exchange, and this is the exchange chart, right? Oh my God, everyone's so excited. They got to buy. They bought down here on the exchange. Okay, so what do we all do? We look at exchange market structure, right? I only want to see something develop for a new token on the weekly chart before I get involved and think that I'm buying any dip. If you see anything that's newly listed and it doesn't have any kind of longer term weekly pullback and consolidation, it just doesn't have it yet, but it definitely will. And it's for this reason. When the market breaks down here, as a retail investor with, you're not privy to any of this, you have no inside information, you're not a seed investor. I'm not talking about illegal inside information. Do you understand what I'm saying? You might look at this and say, oh, we're back down at support. Like, it's a great buying opportunity. And like, hey, whoa, we're 50% off the highs. Like, that's standard deviations away from where we were before, in a very short amount of time. Like, this has to be a good buy the dip opportunity. Well, it doesn't, because if I am, a seed investor, I'm still up 50x, right? So I could afford to sell below the listing price. And you might think, like, who the fuck is selling right now? And it's the people that they're still up multiples, right? And you could bet they sold on this pump. So they can indiscriminately sell, and you would have no idea based on looking at market structure that it was a good, you would think, okay, this is not a good area. Why would anyone sell this? We're at support. Well, it's not really support. It's a construct, right? Support and resist are mental construct. Of course, they have a physical presence on the chart, but I think you understand what I'm saying. So I want to make sure, sand, for example, I have a list of something unlocks coming up, and sand is on that list, and we'll just look at sand. I know the stream is kind of all over the place. Sorry if I'm not like charting enough coins, but that's what happens when I don't stream a lot. Sand, for example, current market cap of sand, right? So one, ton of trading volume. So it looks like you're basically just under $1 billion in trading volume now. Market cap is, we're under $1 billion in trading volume. Market cap is 5x that. Once we start having the trading volume that turns over the market cap, I don't think you're going to get that, but when it gets close to that, it's a lot of turnover, right? So that's not a good sign. It's a lot of short-term activity. But as you can see with sand, market cap is $5 billion roughly. Fully diluted valuation is $16 billion. Okay, so that's a minimum 3x. All right, so it's a pretty ugly ratio. And you have unlocks coming up. And then you look at the chart, and we've had very significant moves already. Maybe we have one more leg up. And I'd like to see something, you want to see something develop on the weekly chart before you start trying to short these things. It's chances are, it's like if you're shorting in this market, like I said, and you're shorting with size especially, once you put size on, it becomes kind of obvious to everyone. Everyone sees where it's the most, when you have something that's forming on the high time frame that looks like a top, you get a bunch of open interest coming in at the top. It's like, there's a chance that Alameda might just try to squeeze every person out who's shorting at that point before ultimately, putting their stake into the market, stake in the heart of whatever that pair is. So that's just one thing to focus on. Now, the pairs that I've been trading most are these pairs right here. So near one, FTM, FXS. Now, these are also having spot positions, but these also are, that sounds a little redundant, right? I have a thing about using the same word like twice in the same two sentences. But my point is I've been intraday trading these as well as having spot exposure to them. Now, if we look at, for example, near, this is one that more recently has become a very popular pair. There's a ton of narrative behind it. You have people like Asaka that, I don't know if you guys saw the post on his effect on the market and momentum, has a real effect on price for a lasting period, not just for the few minutes after. But market structure looks good. Narrative is good. Price is holding a prior composite. I got long right down here. This just looked like a great retest opportunity. Retested a prior composite. We have multi-day, multi-week composite. Top side of that structure. We already retested a prior level, right? So not to just be take for granted what I'm talking about, as if you guys understand what I'm saying. That weekly level right there, we already had a retest of that level. Breakdown today, the first area that I got long was right here, and that's the weekly VWAP. So there was a break outside of this more local structure. You have weekly VWAP. Yeah, we're 2 days into the week, right? The trading week. But still, that's where you would see a good amount of the market get involved. You have to think why. So this is a weekly VWAP right here. So you're looking at, where most of the risk is put on for the week. And think about it this way, right? Why would you see half-life of a socket tweet? Yep. I feel like it's like a week at this point, right? 2 weeks. Longer, right? But I know it was broken down like up to 2 hours after how much, how someone did an entire thread on it. It's a phenomenal thread. And I swear you could develop a whole trading strategy around that. Intraday scalping around the pairs that he's, bringing attention to. So weekly VWAP right here. So we broke out of the structure. You have to imagine that people are, you have a bunch of different participants, right? You have buyers and sellers, right? Very clearly buyers and sellers. But if we're breaking to the top side of this structure, you can imagine there are people that are taking the other side. They're short. It's the way the market works, right? For every buyer, there's a seller. Now you have market makers taking the other side of longs, but you have people directionally shorting. Weekly VWAP, where most of the risk is isolated on for this week, that's the average price. It makes sense that if you're short and the market gets away from where you put your position on, what are you going to do if the market returns back to where you put your risk on? You're probably going to cover your position and, count your blessings that you didn't get your head ripped off. So as we reapproach that level, you're going to see buyers get involved because it's usually a good area in terms of liquidity and to expect a response. And you're going to see sellers get involved and buy to cover their positions that they're currently short, if they, for example, were underwater. Now you could use VWAP, multitude of ways, but basic, explanation. This level is going to act as some kind of dynamic support or resistance. And it's a good thing to recognize. It's a good tool to use. I'm like having a brain fart right now. It's a good tool to use to recognize or identify, rather. That's why I'm thinking wrong word. Identify who's in control, right? Which way is VWAP pointing? Upward? Are we above it? Downward? Are we below it? All right, so bulls or bears are in control. And it's the same concept of, if we have a profile that looks like this, and this is the point of control, and price is suddenly trading here, well, this is a consolidation that occurred. All the risk is put on right here. This is where the most risk was put on. If you just assumed parity between buyers and sellers, if you're trading down here at X, well, sellers are in a better position. Longs are now thinking whether or not they're going to close their positions if they haven't. And if you move away from that even more, and let's say that throughout this period, open interest hasn't even changed as you've moved down, chances are that this unwind is going to lead to a significant spill, right? Because a good amount of risk was put on there. You're going to have shorts adding at that point when the market starts to break down. It's just one way of identifying where risk was put on, right? Where people put positions on. You have to just think about how you would respond if the market moves against you, right? I'm already out of this scalp. So I already got out of this scalp. So when I was looking at this trade, there's a couple things I was looking at. So we're looking at, let me put it on. It is right here. Here we go. All right, so that weekly VWAP is right here. So we have a few pieces of confluence. All right, so I got long within here, and then I chased it up and got long right here. So I entered this trade twice. Or I got in this trade. I got in this trade with both entries being a market order, but I split it up into two positions. I would have originally just got involved here, but after it looked at, jeez, when you drink club soda, it doesn't like moisturize your mouth. It just makes my mouth drier. And I just had tea also. So, what was I saying? Why I got in this trade? Okay, so weekly VWAP, we already went over that. As we were approaching this level, we could see that there was a good amount of strength in the book. So what I have filtered right now is just the large orders, right? So you can see this is just large order sizes right now. It's still there. So if you zoom in, you get a better idea of how much was actually in the bid. And in this case, 26K. So looking to buy 26K near, which is, I think, like $500,000. That might be horrible math, but I'm just thinking about what my positioning was. 24,000 times down there, that was 16, not $384,000. So not huge, right? Not a wall by a whale, but there was someone willing to buy the dip right there. Okay, so we had a good amount of selling come in at that level. You had a bunch of selling trapped at the lows. So you can see a bunch of selling below this structure. Basically just a lot of volume done down there, right? You don't have to look at this. You could look at, a volume candlestick chart and just see on the low time frames, You can look at a 1 minute chart. I know a lot of people say, hey, you shouldn't look at a 1 minute chart. That's bullshit. You should look at a 1 minute chart if you're trading the daily time frame. But you could see a big pickup in activity down here. Yeah, this is Pellegrino, so that's why. So the second bounce, same thing but higher, right? Second bounce, same thing but higher. Your order is staying down there, that 24K lot. A ton of volume committed below the lows. It's not like longs are flushed out, open interest staying relatively the same. All right, so you have a bunch of shorts coming into the market at this point. Bitcoin is currently breaking down. Not breaking down, but I think you understand what I'm saying. So it was a good opportunity. I ended up closing it right below where you see this limit right here. So trading lower time frames, getting more of a feel for alts, and getting more of a feel for how actual presence within the book will what's it called? What's the word I'm thinking of? Influence price. We had the same sort of size at the low. If I'm saying that that's a low worth respecting, and I already have a really good scalp at that point, it was like 150 basis points, 200 basis points. Let me just verify that real quick. Yeah, just under 2%, I think is where I squared away at. But I'm looking at this at the low saying, all right, we have a bunch of information saying I'm going to get long down here. That's sort of adding up. That's part of the reason, it's always nice that you see, it's always nice to see you have that at the low, or, if you're looking at selling a resistance. For example, I sold yesterday, I was shorting Bitcoin. Someone said, why are you shorting the lows? I'm saying Alameda has a fucking wall up. Like the few times that it's happened where it's been this deep and this thick, price has not gone through, right? Price has turned away. So I took advantage of like a $500 scalp because of that. So I ended up closing this into right into 1660. So right below that. So it was like 1657. We ended up, squeezing through, but either way it was a good trade. Now I use XO for if XO had this for alts, that'd be great. I would do the same thing. I don't know. I was using XO today, and to be honest, I don't have XO open right now, even though I used it for BTC and ETH, because every time I went to go move my XO, like, it's kind of stupid, but my XO desktop platform, it was coming down slightly below slightly into my taskbar, and every time I went to go adjust the screen and move it up slightly, stupid OCD, like I didn't need to, I could still click the buttons under there. It froze the platform and turned it off. I did that over and over again. I mean, they might have bugs or something like that, Oh, Jesus Christ, I can't even talk today. They might have bugs, or it sounds funny to say bugs plural. They might have a bug, right? So, XO is a great platform. But near, from a high time frame standpoint, one reminds me of Avalanche, honestly. I shared the structure a few times. And this is going to sound not sophisticated at all, okay? It has a narrative right now. It has the market's attention. It's just breaking out of higher time frame. It looks like it's just starting to reclaim and break out of a higher time frame consolidation. So similar to what AVAX did in the past, AVAX had an all-time high, spent a long time away, broke above, had this deviation, and had a reclaim, and this is a weekly chart. So weekly evidence, is evidence that I think holds the most weight. And just, again, so you guys, I'm not taking for granted that you know what I'm talking about. Here's the AVAX, similar chart. Okay. Reclaim of weekly, of the weekly chart. And just odds are that this has more follow through now. It's just eyes on that chart, eyes on the reclaim. It has the narrative, it has the momentum right now. It's one of a few pairs that does. So I think that just chances are if I sold my spot right now, I'd be selling early. Chopping around this level, something that I have to get better about is paper handing alts. That was my original issue, was one, not trading them on the lower time frames at all. And when I was swinging them, I was paper handing them. Right? Versus trusting things like, honestly, the dumbest things have worked with alts. Like, this popular pair has done this exact pattern. Now the same thing is taking place with another pair. It's sort of the flavor of the month. It's in vogue on Twitter. It's, being tweeted by Asaka. It's in an earlier part of what is basically an identical structure to the last pair that was the flavor of the month also. And I feel like every time I've seen this, it's just occurred positively. And I paper-handed it instead of holding out and waiting for it to resolve as completely as it could, or close to its potential. So one and AVAX, I think one's going to resolve similarly. So looking at one right here, I think that it's in the cards that, for example, if I'm just going to think nearsightedly and be myopic about it, I think we have like another 20% move because I think we're going to tap the all-time high. FTM, I went over and I was a little bit, I guess, I am being opaque about what is the reasoning behind the tweet yesterday, but I shared that, someone shared with me something that, in my opinion, is a really good reason to be long this for at least another 2 weeks. And I will be adding to this. So I probably got, first of all, I got involved at FTM around 210. We could pull back further than that, right? It wouldn't be the first time. We're still within a higher time frame structure. We could come back and test these lows. Do I think that's going to happen? I don't think it's necessarily within the cards, but it definitely is in the cards, right? It's a lot of combinations of cards, right? I think if you shuffle a deck of cards, that the combination of cards when you shuffle a deck, the chances are that combination has never existed, right? If you were to take a complete deck of cards, shuffle it, that's the first time that a deck of cards has ever been that way in the universe, based on all available combinations. But this is just another pair. It's similar to, Sol, Luna, AVAX. I think with FTM right now, with one near, FXS is another one that I'm very focused on, but I can't trade it the same way I'm trading these three pairs because it's not on any exchanges that I could trade on. Sold your FTM at 115. Listen, if it makes you feel better, I sold everything that we talk about, everything that I've ever talked about. So if we just go to my DeFi list, I sold Aave, I think, at $30. Yep, I was longing Aave down here. I sold SNX, I think, at 50 cents. And SNX is not something that's attractive anymore. Not 50 cents. I must have sold it. Josh and I were sharing this in the newsletter, and where we talked about this being a really obvious long, it definitely wasn't 50 cents. It was right around 2 to 3. Where we talked about this being an obvious long was a reclaim of this structure. So poor memory. So I always talked about, reclaims a higher time frame structure if it's a new pair, right? Especially when you have a double bottom like this. So I paper handed that. It wasn't Solana because I was shorting Solana at like $6. So if it makes you feel better, everyone does that, right? Yeah, I remember shorting Solana at like $6. I remember saying that Solana was like topped at like 30. So it happens to everybody, right? You just really can't begin to, unless you're a completely irrational person. Whoa. I keep drinking it, but my mouth just keeps getting drier. Unless you are just completely an irrational person, it's hard to imagine the follow through that these pairs have. And it's almost like if you traded with that expectation anyway, you'd blow up, right? Because you would have like zero risk management. Okay, so Dark Forest is Dark Forest just said I've said, what someone told me, so I didn't want to say anything because I didn't want to like violate the relationship secrecy between us, but that's what I was referring to. So launching a token, or maybe you said product and I just said it now, but I'm pretty sure it's going to be a token launched. So a product, right, with something that you could trade. And so that's another example. So Danny and Andre, it makes sense to, so these, it's not the case with everything because like Spell, I can intraday trade, but it's thinner. But for example, Wi-Fi, anything that those two mention blows up, right? It's like anything that Tetranode mentions blows up. No. I've traded XRP like everyone else, but I don't have any long-term positions in XRP. No. A lot of people that are new to markets have, like a lot of older people that are from Legacy also, like people that I've met, they're interested in XRP. It's like the first thing that they go to. And I think it's just the Coinbase effect, honestly. It's like a lot of people did get involved in crypto in the last 3 years. More people got involved, obviously, the last year, but a lot of people got involved, and there was like a few pairs, and it's, the unit bias of when you're on Coinbase, there's, Bitcoin that at the time was, multiples lower, but you're a new person, you come to the market and you see there's this thing that's for sale, you don't know, you could break it down into parts, but it's $15,000, and then you look at XRP and it's 30 cents, and you're thinking, well, maybe that would be a future Bitcoin, I could buy a lot of that, It's basic, like, it's behavioral bias, right? So, which is why you have to, honestly, not you have to, because it's not financial advice, but when I see something that's trading for a penny that's on a major exchange, and it's not like already, $10 billion market cap, I'm probably going to buy that, because a lot of people that are new, especially if it's on a new exchange, not a new exchange, a fiat on-ramp, if it's on an exchange like Coinbase, if it's on an exchange like FTX, Binance, chances are that a lot of people are going to look at that as a great opportunity just because of that unit bias. I'll look at Rune. I think you guys heard my wife sneeze in the background. Rune doesn't really look too good, right? So Rune has a lower weekly in the making right now. It's made, right? So if we look at she's training her, you could hear her say break. That's what we say when we're ready. So when we feed our dog, Freya, we'll put the food in the bowl, and then she'll sit, and then we'll say a bunch of fake words, right? So her keyword for going for food is break. So I'll say like bumblebee, bubble, and she'll like flinch but not go until you say break. From this locally, it's not it's not an attractive area, I would say, to get involved. For me personally, right now you have a lower high on the weekly. Yeah, maybe you're forming a longer term consolidation like this, but more locally, you're putting in a lower, a lower low. Whereas if you look at BTC, that's one of the sort of things that we're hinging. What is the remaining argument to be made for this is still like on track on the high time frame. So my trading setup is for BTC, it's Quant Tower. Now that I'm trading alts, like I could definitely use more of Quant Tower. I just haven't done it in the last couple of weeks. Where now I could, I trade BTC through Quant Tower. I had an issue with them for a while, but as I said, devil you know is better than devil you don't know. I stuck with them. I haven't found anything that has the same, that offers the same, ladder and execution. Besides like in Silico Terminal, but I like the ladder. But I could also, I guess, trade a bunch of the alts through here now too, which would be great. And then I use XO. I think XO is a phenomenal platform. I just started using Trading Light. I used it in the past. You guys remember I shared it a long time ago, like 2 years ago, when it first came out, when it was locked. Used it then. Great platform. What else? Yeah, guys, if you have any questions about other things that I use, just hit me up in a DM. FXS. She's probably grabbing something that she shouldn't have right now. I think FXS is going to be, and I'm not saying this because I am plagiarizing smarter people in this area of the market. So, people like McKenna, Andrew Lee, who originally got me into FXS. Some people just hit, right? So if they hit consistently, I'm willing to to outsource some of my bandwidth to them. As long as the chart, technically, for what I look at technically, if there's confluence between their fundamental breakdown and what I look at, and I say, hey, sound, looks sound from a technical standpoint, then I totally get it, right? In equities, if you have a good technical setup and you have a great fundamental story, that's golden, right? In crypto, that's awesome too. You have a narrative driving it, you have fundamentals and technicals. Like, what more could you ask for? Perp is like perpetually dying, right? So when it comes to alts like this, after they've had a significant breakdown, it could turn in the middle of nowhere, right? So if I look at this as the key weekly levels, I'd say this general region is obviously more important than any one particular, line in the sand there. So on the daily, retesting this level, is it a retest? Yeah. Is it bullish? I don't think so. But could we develop a bottom here? Yeah, but I think where we're at right now, if something is really underperforming BTC, I think it's going to depend on BTC to start outperforming for this to catch any kind of tailwinds too, right? Because when Bitcoin starts outperforming, it's like the rest of the market is getting permission too, even things that are weak. So when this is looking shitty on its own, Bitcoin is kind of consolidating at the lows, waiting for maybe one more spike to the low. It doesn't make for a compelling case to get involved here. When I look at a structure like this, if we have a lot of alts that are already doing this, where they're at mid and they're breaking further down, I just wait for the next major areas to be interacted with. And the best opportunities in alts that take some time are honestly revisits back to historical lows on the weekly time frame. This is where you have to be patient, where you get something like this and market breaks all the way down here, and it's like, how much further is the market going to go? Sure, it could go far, but you get that crowded setup down here where you get shorts offside. It's not a good technical area to find a short position. Still, nevertheless, you get people doing it, and we end up building some type of double bottom, at least in the interim. Yeah, McKenna, he was one of the original people that got me involved in perp and DYDX, and I think he's as confused as I am. So, as to why they're, DYDX has, it's a horrible, there's no tokenomics, right? There's no reason for DYX token to have value. Perp, there is. So, I don't have EXO open right now, so I'm not looking at a footprint or anything, but I think that still, what it looks like happened, you have this little war taking place between Bitfinex and FTX. So just to go back to that, whoever was selling, right, Alameda, this was filled, so this wasn't pulled. So we traded into that level and lifted those offers. All right. So you have that wall versus what is still a very significant bid presence below 45.5, all the way down to 44.5. And if we just look at where that window lines up, what's my life? My wife sounds like she's at Warped Tour right now. Where's the BTC chart? All right. That's right there. So that would be taking these lows, and that'd be exploring this wick. And yeah, I think that you could easily see a bottom develop there. And anything like that, let's say you get a deep probe down here, anything that starts recovering these local lows, just because at this point you've had so many taps at this level that I think that is, that clearly is a level that the market has interpreted as important. There's a lot of people that got involved there. I think that if you break down lower, that you reclaim something like 46, it's very easy for this to slingshot back in the opposite direction, right? So far you have a bunch of uninterrupted lower highs, liquidity, and nothing fancy, right? Just stops that are sitting comfortably. So you get that sort of domino effect. So you get, one-sidedness into the low, shorts of the low, market squeezes them and then easily starts taking these highs. And that's why that's why you have a level like this. You might get that level, but you might just have to bottom tick this, right? Not saying to do that, but what happens is market breaks down and then you don't get to buy down here. You're in a position where now suddenly you have to think up here, right? Because this all happens very quickly. And you're like, oh fuck, was that the bottom? Or is this gonna just reverse? But I mean, same story back here. This we ended up taking out that low, right? So that would imply going down all the way down to 42. But as I said, anywhere back in this region, down into this region, I think is fair game for a bottom to develop. I don't think we're in a position in the near future where we're back below 39. So. Yeah, it's a big candle. It's not even a lot of volume to get it moving. So you have a lot of selling right here. But with respect to this buying, I mean, you have like half the amount of buying to get, to get price moving. So what that looks like is not much resistance to the upside. And right now you have, how many times the selling of that buying so spell is something though that I'm bullish on too. I think that it pays to be bullish as long as we respect this structure. Right, you have this sort of W bottom in play. And seeing something like that, you might think, oh, there's a lot of selling, that's not good, right? But it's a lot of selling that right here is being absorbed, right? Whereas that buying was not absorbed at all. So I guess it's the best way to think of it, right? When I talk about like work versus results. So very little buying was required to move price up. A lot of selling coming in, multiples this, and price is still at the halfway point of this entire structure. So, where's the market trying to go? In this case, it's a lot more of it's trying to go down, and it's going down. It's moving less than it was able to move when it barely tried to move up. So there's less in the way to the upside than there is to the downside, from the looks of it, right? I don't know what the likelihood of passing your bids is, but I know that if we do pass your bids at 40 to 45, the likelihood is very high, almost certain. I mean, it's tough. If for example, FTM is on the top of this list for the when we're looking at this Z-score list. FTM is like 2.5 right now. So FTM near 1. There. Let's go to FTM. So now that I'm trading alts intraday, this is what I have set up. You can see I have a chart on the left that's set up with a higher time frame chart. I have a weekly VWAP on. I have my profile on because I'm still always using those, right? And then I have a lower time frame 3-minute chart on right here. And actually what I should have on right now is a daily VWAP. And yeah, daily VWAP, and that should be really it. Don't need to overcomplicate it for alts. But Phantom on the... Sorry, I'm just busting out my laptop right now. What's going on? Why is this scaling weird? Oh, it's because all right. I just want to keep an eye on spell. I might want to start tagging on a position. I was in and out of this, but like a lot of other things, I didn't hold for the high. So what was I saying? So I mean, if you look at this right now on the daily, I would expect that we're going to have some kind of top formed at some point, right? Locally, which brings. Just want to map out some high time frame structure. Weekly pivot right there. Right, more local daily levels. So, and you could, like, people use fibs. If you want to find if there's confluence between, structural areas and fibs, I think that can only help, because I know some of you guys have asked about them before. But if this is going to top, I would expect a support to develop right within this region. The last thing you would want to see is in a really strong move. If this is going to continue to be strong, then you get a deeper pullback. So while I said you could come back down here, I certainly wouldn't enjoy that. Honestly, if this is really bullish, we should find support right around 260. So prior resistance now turns support. So I think I'm gonna wrap it up though, guys. I'm tapped. I'll do another stream on what's today? On Thursday. On Thursday I have something I have to do, but then I'll fit a stream in. And I'm gonna do another call in this week. So maybe I'll do a call in tomorrow. So I'll post a link. And that's that. All right, guys. Thanks for stopping in. Sorry if this stream was a little bit all over the place, but that's what happens when I take a few days off. And if you are interested in awesome computers, check out Zydax. I shared the link on. I shared their Twitter. This is a fucking awesome computer. So, adios. I think I'm losing my voice.